Welcome, ladies and gentlemen. FOMC, baby, yes. The biggest moment that we've all been waiting for. Now, we've been through many FOMCs, but this one is an important one. This is going to decide if the United States Federal Reserve is going to cut these interest rates, or are they going to just keep them on hold yet again? The structure for this evening, ladies and gentlemen, is as follows. We'll be getting the federal funds rate in the next 10 minutes. Then we will get the minutes or the projections themselves. And then we will have the conference, which will be 30 minutes after the funds rate is released. That's when the nitty-gritty comes into play. That's when we're going to know if Powell is going to say, yep, we're going to cut the rates in September, or we're just going to stay at square one, where he's going to keep on banging on about data. I mean, we've had some decent data. Come on, let's be honest now. ADP non-farm came in lower. That's good news. Less people working, less of an impact on inflation. Employment cost index down. That's good news. Doesn't cost companies more now to keep people employed. So less jobs, less money to spend on people, less chance of inflation going up. But we have non-farm payrolls coming out on Friday, so that could really put a spin on it. And I think Powell today is going to be saying that we need a little bit more data, but we should be cutting in September. I think, in my opinion, if he doesn't give us the conviction of a cut in September, he'll be beating around the bush on the idea that cuts are happening, but we need more data. That there will just really rock the market. They'll be like, no, he's not cutting. End of. Next year, ladies and gentlemen. So it's going to be very interesting to see what happens in this live. So, if you are new to this live stream, make sure that you are comfortable. Make sure you got your coffees and your popcorns. I've made sure that there's no bees in this live stream. And if you're wondering why am I talking about bees and wasps, just go and watch the live stream from this morning. Watching it back, it's quite a traumatic experience, man. When you've got something that big, like, ready to just... Let's just hope it doesn't happen, because I've got my eye on this bloody window. Anyways, ladies and gentlemen, let's get with the program. Let's get with this FOMC. Here we go. All right, then. So let's just get it all started. Good afternoon, good evening, good morning, wherever you are. Yes. I'm not talking about wasps. That's it. Now, all right, hold on a second. Get to the charts, bro. But Bitcoin ain't doing too much. Don't worry. Don't worry. Bitcoin won't do this. It was exactly where it was when we spoke earlier on. It's exactly the same spot. So don't worry. FOMC minutes coming out very shortly. Sorry, the statement. Federal funds rate, it's coming out 7 o'clock. We've got 10 minutes. And once these two articles or the statement and the funds rate do actually get released, that gives us 30 minutes just to really look at what we can expect from Bitcoin. I'll be looking into some stocks. I'm going to look at Nvidia. I'm going to look at Tesla. I'm going to be looking at some altcoins, because some of you might have some altcoin positions that you want to know what could be happening next with those. So we're going to be diving into those within that 30 minutes just before the press conference itself, okay? There's also questions. You guys might have some questions you want to ask. Fire them away in that 30-minute window before the press conference, and then we're going to have the press conference playing live, and then happy days. Let's see what happens with Bitcoin from that point, all right? So let's get with the program. Nvidia's up 12%, absolutely mad, okay? It gave back yesterday's losses. It gave them back and plus more. Look at that, man. 12% up. That's absolutely madness. But what it lost yesterday, it came back to the upside. And then, of course, we've got another gap here. So I believe that Nvidia is going to be crazy. It's going to become really crazy and a little bit more volatile than Bitcoin, in my opinion, given what we've seen with this sort of behavior. Okay. Now, quickly going over into a few things. We're going to just look at Bitcoin for a second. You can see Bitcoin is starting to pump. Okay, it's starting to make a significant move up. We need to just have a look at where we are in terms of the order flow. You can see Bitcoin is starting to work up. And during the FOMC press conference, we're going to be having this image up here. And then we're going to have the press conference playing away. We'll probably work it out in some way. But we're going to be paying attention to what's going on here so that we can really understand if Bitcoin is primed to make the move to the upside on the grounds that the Fed is going to cut the interest rates, okay? So what we got here? RTB, mad love to you, my friend. Mad love for that. Okay, then cool. So let's just work out the following, okay? Where Bitcoin is right now in relation to where the orders are that people are prepared to buy and sell from. Well, according to sources, retail investors aren't around. And that's a little bit concerning. It's 10% below its all-time high. And then, of course, retail isn't about. It says here, Bitcoin moves within striking distance of its all-time high, confirming the macro uptrend. But then retail investors are still missing in action. And according to Google Trends and crypto YouTube data, which is pretty crazy, given that you've got all these approval of the ETFs, you've got Bitcoin being discussed by 2 presidents trying to run for president, and retail isn't getting caught by it. That is, honestly, I think people are, be honest with me, guys, and comment below. Do you think people are bored of crypto? Let me know what you think with that. Because if retail ain't stepping into cryptocurrency, that means even with Bitcoin near its all-time high, come on, it's not too far away. And that's not grabbing people's attention. What do you think? I ain't bored of Bitcoin. I get bored of the way it moves sometimes, but I'm not bored of crypto. I'm not bored of Bitcoin. Maybe people don't understand the true potential of cryptocurrency. Maybe they just think it's bad news all the time. Well, depending on what you're talking about, you know? FTX, Terra Luna, it's one of those stories, you know? But it's a shame because there's so much hype behind cryptocurrency right now. And if 2 presidents that are trying to rally for the support of people in crypto, and that's still not enough, what needs to happen? Does it need to be cheaper? Maybe. Let's go into other assets. Let's have a look at the dollar dominance itself. Dollar right now has bounced from that green vector candle region, and it's made the recovery back up. Now, what we need to pay attention to is, of course, the bonds and the yields. You can see the yields are trying to itch a little bit to the upside. NASDAQ is up 2.66%. And the logic says that if we have got a cyclical play in motion, that NASDAQ in principle should be working a little bit more to the upside. I'm still in my position on NASDAQ. I'm waiting for this thing to start working. And if we don't get the information that we want, then I'm probably gonna, I can realistically hold this, okay? And NASDAQ in principle would need to drop all the way down. It would have to drop down towards 18,719 for me to be really thinking, okay, it's probably going to go down lower, because that's pretty much where my entry was. All right, so I'm just going to wait and see how it works. If I have to act, I will have to close the position. I will close the position, no problems, okay? But it's a long-term play, okay? Now, quickly going over into Tesla. I just want to look at Tesla for a second because we're going to be seeing that information coming out in 6 minutes. Tesla's made a nice move up, and now we've got this gap in play, and it's been very, very choppy. And it's the heavyweight stocks that are going to be leading the move to the upside, ladies and gentlemen, especially with the stock market. Having a look at what's going on the NASDAQ and, of course, other stocks. Here we go. Just have a look at Meta, because Meta's going to be releasing its earnings very shortly when we get into the close of the market. So Meta itself is looking very well, up 1.48% for the day. It's holding at this moving average. And collectively, they need to really sustain themselves on their earnings and their sales. And if they do beat their earnings and sales, because the last reading was 78% in earnings and 27% in sales, if there is an acceleration on this, that means sales and earnings, then in my opinion, Meta could end up seeing, if it does sustain it, it could end up seeing the $550, $580 a share for Meta. So it's a $100 gain if they actually do well with their earnings, okay? Now, going back into the charts right now, I just want to have a look at Bitcoin. It's not really doing too much. Let's have a look at Solana. Kill that. So Solana right now looks like it's forming a very interesting base. It's holding the 200 EMA. It's holding the daily open. And this is what I said to everybody, okay? The guys on the Platinum membership. I've said to them all, if you're all going to be taking trades beforehand, the question is, how many of you are in trades right now in this range on Bitcoin? Type 1 if you're in a trade right now on Bitcoin in this current range. So that's a range between 65,931 and 66,824. How many of you are in this sort of range? I'm not interested in the guys that are in longs from all the way down here. There's nothing really for you to be concerned about, okay? So anyone within this range, type 1 if you are in that trade. So type 1 if you are, 2 if you're not, okay? So it looks like there's quite a few people that are long in this area, okay? So what I've got to try and work out, well, help you guys understand something is this. I anticipate, I hope that you're not using too much leverage, okay? Now, why am I saying this? Because in this area, it's going to be the make or break for Bitcoin based on the data that's going to come out very shortly, okay? The best way to approach this, now this is for anybody that's not in a trade, because I've seen some twos right now. Use a small position. Test the trade. So hypothetically, if you were thinking, yep, okay, Bitcoin's going to move up, right? You open a small position, very small position, to the point where if it was to go in a mad drawdown, you would lose $10. The whole point of that small position is to get a feel for how long it's going to take Bitcoin to get into a good profit. Now, why would you use a small position? Because when you see that you're in the right direction, because right now there's no direction, you're waiting to see if it's going to go up or if it's going to go down. But when you use a small amount of liquidity, you can then be in the trade and you're now waiting for confirmation that you're right, okay? And if it does work in your favor and Bitcoin moves up, the next thing you're waiting for is the retrace back down. And if Bitcoin can hold this point right now and say it makes a move up and it can hold, you're looking to load up to the position. Don't go too deep. Don't load too much, but add to the position. Because if Bitcoin does pump up, it would be on the assumption that the news is good. The stock market will keep moving up, okay? So Bitcoin should follow suit. But using a small exposure in the first instance is going to give you the chance to get a feel for what's going on here. That way, if Bitcoin does go down, you're then looking for the next criteria, which would say, okay, if you're going to go down Bitcoin, what do you need to see? What do I need to see? I need to see it break lower. And if it can do a little bit of a retrace, that retrace would be this area. And you know that the news is bad. Bitcoin, in principle, should follow the move to the downside, okay? Rather than you risking too much capital. Now, those of you that might be in positions and you've got some size on, just manage your expectations, okay? Because right now, in the next minute, we're going to see some madness on the FOMC. So let's just quickly move everything across here. I'm going to bring this. Want to keep an eye out on any orders that could come into the chart. This is Bitcoin right here. Happy days. All right, then. Here we go. One more minute. Remember what we said earlier on about this information here. What we're looking for is the blue numbers to appear. We want to see more blue, okay? And when we see the red, we don't want to see too much of it because the red is where the bids are stepping in. But the bids might want Bitcoin cheaper so they can hit the bids and it keeps on going down and down. We want to see more blues to suggest that people are buying Bitcoin because people are looking to sell it. You've got an order up here, 233 Bitcoin that wants to be sold. Here we go. It's crashing. Giving it a chance. Here we go. Look, all these orders here. All right, we just had a lot of orders. Not too much, actually. NASDAQ is still doing its thing. Not really giving us anything. Bitcoin's holding out. Here we go. Can it make the break? We're seeing an even distribution here. And this is not even FOMC. Muted. Nothing. NASDAQ's not even doing anything. Yeah, I mean, I'm not really getting that much of a response. NASDAQ's pulling back ever so slightly now. Bitcoin's not really doing too much. Pulling back ever so slightly. Nothing to be concerned about, guys. Yeah, man, ExoCharts is struggling right now. Look at that. Look at that. Oh, my days. See, when you get that, you're not really seeing anything, you know, and this could be the stop run. Let's just quickly go into the poly. There you go, federal funds rate. That's fine. Bitcoin's doing the move right now. Hold on a second. Let's just have a look at where we are with the news itself. They said anything, FOMC statement. Here we go. Fed repeats, waiting for... Here we go. So it says here, remain strong and moderated. Okay, look. Oh, what a joke that is. All right, recent indicators suggest that economic activity has continued to expand at a solid pace. Boring. Jobs gain have remained strong and moderated. And the employment rate has moved up but remains low. Inflation has eased over the past year but remains somewhat elevated. Committee seeks to achieve maximum employment, not interested. The committee judges and that the risks to achieving its employment and inflation goals have moved towards a better balance over the year, continue to move into better balance. So basically, the negative is highlighted, the positive is highlighted in green. So is attentive to the risk on both sides on dual mandate. That's not really good. Well, it's all right, but they want more evidence yet again. More evidence. That's kind of... But the stock market, NASDAQ seems to be doing okay with regards to that. Just quickly have a look at NASDAQ. That's not too bad. Choppy. Oh, man, that's really put things in the spin right there. So if Bitcoin is going to continue higher, ladies and gentlemen, and they're not liking the news, they could move Bitcoin up and then bring it back down if we don't get what we want to hear in the press conference, because it's holding out here very, very well. We've got Ethereum on the left over here. On the right, that's Ethereum. I'm muted with that, ladies and gentlemen. I'm very muted with that. Very muted with that. You can never have too much evidence. This is true. This is actually crazy right now. Just going into the news itself. What's Bloomberg saying? Let's quickly go up to Bloomberg. Any data on Bloomberg? Fed officials hold rates. Signal first cut is nearer. Policymakers attentive to both sides of dual mandate. Okay, say there have been some further progress on inflation. That's fine. Federal Reserve officials have held interest rates at the highest level in more than 2 decades. Yeah, not interested. So following the reaction real time on Bloomberg's Top Love blog, policymakers have made several adjustments to the language of the statement released after their 2-day meeting. Oh, yeah, sorry for that. Yeah, I saw that, the gentleman that says it's been removed. So in recent months, there have been some further progress towards the committee's 2% inflation objective. Officials have tempered the assessment of the labour market, noting jobs gains had moderated and the unemployment rate has moved. That's fine. I'm looking, not really seeing it. No. Oh, no. Oh, my days. Are they going to get the cut? What do you think? Is Powell going to really give us the flavour today? I don't think he is. Here we go. It was expected. We knew it would be unchanged. They're waiting for him to speak. We know that the interest rates were going to be held. That's no problem. I'm not interested in the interest rates now. We know it was going to be held. But now that with this statement suggested they want more data, I mean, to be honest with you, if we had the press conference after the non-farm payrolls, then that'll be a different story. I think they've seen the data and they thought, okay, maybe, maybe not. But it's very peculiar what's going on right now. They've been building this position, this logic of cutting the interest rates, going into the volatility index itself. All right? Volatility index is going down. So when this goes down, in principle, okay, you should be going short. Okay? And when this goes up, you should be getting ready to go long. Okay? But it's catch-22. So right now, people are building puts on the NASDAQ and the S&P. Looking at NVIDIA itself, the press conference is going to be bloody interesting, I'll tell you that. It is going to be very interesting. How's oil faring all that? Okay, oil did very well today. Didn't even see the retrace. It went beyond. Happy days. Okay, then that's fine. We did a nice... Those of you that took that setup, if you did, happy days. Euro, look at that, man. Look at that. Both setups come into action. Right there. Oh, not there. Never mind. But the move up to come down. Entry, down. Looks like that could be the case. Dollar dominance coming up. What's gold doing? Gold slowly climbing up, but not really moving too much. But Bitcoin, come on, here we go. We got some movement in Bitcoin. Here we go. All right, then. Now, I want to go back into it. Bitcoin is currently at its profile for the day at the highest point in the range. I'm not too keen on this meeting, ladies and gentlemen. I'll be honest with you. I'm not too keen on it. But NASDAQ's doing okay. Our position seems to be doing all good right now. We seem to be okay. We're doing all right on that position so far. Any questions, ladies and gentlemen? The statement is hawkish. That's the thing. The statement is hawkish. That's what I'm getting from this. If they wait now till the... Is it too late? Is it too late to rate cut? Recession is probably on the way. Recession, I mean... If they're hiding the data itself, and they're not really giving us the true data, we could already be in a recession and we don't even know it. I've asked you guys, tell me what it's like in the States. Tell me what it's actually like. I'm hearing people that have got restaurants. Gentleman, Zigzag, he's telling me about his restaurant. You know, just based off what people normally buy. And he's not getting those same people buying the same thing or in the numbers that he'd expect. You know? Truckers. How many of you are truckers out there? What's your routes like? Have you going shorter distances? Are you carrying less in terms of your pallets that you're carrying or stock? What is it? Because it's those things that are going to tell you where you are in the economy, in my opinion. It's all good going to shops and trying to buy all the stuff in there. But if there's no truckloads of these items getting to the shops and they're not being filled, then things might be changing, man. If banks are struggling to sell financial products and they're making their money from trading activities, that means they make money when they say to someone or someone calls them and says, I'd like to buy Nvidia stock. Yep, no problem. There's 2% for me. They're not making the money off any other financial products like mortgages. But then again, pending home sales came in so much higher today. And that could be scaring the Fed to cut in the interest rates. It could be scaring them. Here in New York, people are spending 45% less in restaurants and goods, and food is up 150% in the last 3 years. There you go. Walter, New York City. Mad love and respect, bro. I'm a firefighter, paramedic, and my wife is a nurse. We make good money and still struggling. We don't live lavish lifestyles either, just trying to get by and support our kids. So that's coming from someone that makes good money, doesn't need to live lavishly, still struggling a little bit. Oil's not expensive. It's down by crude oil. Okay. Is that being reflected for you guys? How much are you paying a barrel? I mean, a barrel. How much are you paying? What do you guys use? Gallons. Sorry. I was going to say liters, but be very interesting. So interesting. Went to Cedar Point. Cost $68 for 2 people to eat. What's Cedar Point? Forgive me. Happy days. What did he say? Bees in Thailand. Bees life in Thailand. God, that kind of scared me there, bro. Bees in Thailand. Don't be talking about no bees. But yeah, mad love for taking the course, bro. Thank you very much. All right, look, man. We've got a little bit of movement now, but I'm not too concerned because we've got another 20 minutes until Powell speaks. But it looks like the actual statement is kind of giving us the idea of where we are. I mean, NASDAQ is still good on the bid side right here at 19,445. But remember, NASDAQ has been dropping down for a long time, and Nvidia moving up so aggressively because of them being tipped as the biggest US stock in the stock market and endorsed by Morgan Stanley. People want to rush in and buy. So that's what could be holding the NASDAQ. But we just got to be very careful with it because it could get a little bit tricky during the actual press conference itself. NSYNC. There is too much imbalance for Bitcoin to bring from the upper part. 68,500 average. I see what you're saying there. But I mean, looking at the chart, guys, this is all I'm waiting for. I'm waiting for Bitcoin to try and hit this. Okay? But I'm looking around. Look at USDT chart. That's basing. We expect it to come down here. Okay? Because this is where they aggressively had transacted Bitcoin USDT. This is behavior here. USDT goes up, Bitcoin goes down. USDT goes down, Bitcoin goes up. The imbalance logic says that we expect some transactions to happen which would send USDT down. Okay? Because Bitcoin is leaving the clue behind right here. All right? Just quickly going over into more news itself. Signal first cut is nearer, but that's misleading, man. It's so misleading because they're not really saying it's not. I don't trust it. I really don't trust it. Quite balanced. No. Signals first nearest cut. Stocks hold rally after the Fed. Eyes no. It's for me. I'm not cutting it. I'm not cutting it. Ethereum, not really doing too much. Let's have a look at some altcoins. BNB, where's BNB? Still doing the same thing over here. Matic, that's doing all right. Let me just go over to this nut job here. XRP, nice little drop, which could be the clue that they could be getting ready to bring XRP back up again. So that could be interesting right there. So keep an eye out on XRP. Jasmy token's taking a bit of a stump, but it has been moving up pretty well. It's doing very well, to be fair, given that it's done this crazy move up, come back down to only meet the midpoint of that. So we expected them to come back into that range anyway, if you guys remember. Dogecoin, for anybody that's on Doge, it's not really doing too much. It's just trending downwards. Bit of a problem for me with Doge. I think they were just waiting for Elon to just talk about it. Any altcoins you guys want me to have a look at over the next 15 minutes, then we can just do that as well. I'm going to look at Bitcoin again, bring that up. Okay, then. No real direction. CAS. Let's have a look at CAS. See, Casper's doing brilliantly. Of course, with Marathon Digital, they're mining it. So that's going to be good news for Casper. But it is climbing up very well. It's very interesting that it has actually done that. Let's have a look here. Did we? Oh, yeah. We did mark that off not so long ago. Upbreed, yeah, they're cyclical. We've got a trend in Casper, okay? I believe that if it works favorably, I'm looking at a bigger picture here. Casper could actually, we could see 30 cents if it maintains this behavior here. Yeah, 30 cents could be on the cards for this, but it'll be a progressive climb. It won't be happening overnight. A progressive climb to 30 cents. That's what I think what it would do. T, can you look at USD CAD? What do you think is the reason for this move up? USD CAD. So what you got to remember with USD CAD, okay, is when oil goes up, technically, because they buy oil in Canadian dollars, okay? So when oil is down, dollar CAD goes up because it's no good for them if the dollar is appreciating against oil, okay? So if dollar's going up and oil's going down, that hurts USD CAD, so it hurts the Canadian dollar. When oil goes up, USD CAD goes down, okay? So what you're seeing now is USD CAD is coming back. So that tells me that oil's going up. We know that oil's going up because oil in principle is now trading 4.4% for the day. And you can see what's going on with what looks like a potential recovery back into the red vector candle region over here. So we can assume that USD CAD is getting ready to start rolling over, which could mean that the dollar's going to start rolling over, which could mean that Bitcoin in principle could start making its move up. Okay? But we're not going to know that until FOMC press conference. We're going to be, just really am interested. They're saying that the interest rates are going to get cut is nearer, but I'm not seeing it. I really am not seeing it. Okay, we got some comments here. Hold on a second. Could you please check Can you check Shiba price analysis? Check Shiba. Okay, then. Shiba Inu. Okay, then. I don't know why I'm getting this. I don't want that. Sheep. There we go. Do you know what? I always struggle when it comes to this analysis with sheep because I get so put off by the numbers. Okay. But fundamentally, the volume is there with Shiba. Now, what we've got to be careful of is it could get ready to roll over, which means that the dominance, as long as it sustains itself and climbs back up, then altcoins are probably going to see a little bit more bleeding to the downside and Bitcoin dominance are going to come back up. Okay. But when you're looking at Shiba itself, you've got to just say to yourself, in my opinion, it's an asset that you either hold on for a long time, and if you're going to be trading it, you need to be trading back into vector candles because it's subject to imbalances in the chart. You've got to be very... I can deal with that one. Don't worry about that. You can be, it's very prone to volatile behavior and snappy behavior as well with the wick. So just be very careful when you're trading Shiba. Okay? Check TrueFi. TrueFi, here we go. All right, so TrueFi over here. So after a big initial move to the upside, it's come back down. They're accumulating it again. I'd say once the flow in crypto starts to happen, then this could actually start picking up traction and go up again. But that's on the 50-minute time frame. Looking at the daily chart itself, obviously it's had some fun. It's been able to make some movement. It's still, actually, to be fair. Wow. All right, this is a long-term projection, but they will come back into this wick. They really will come back into it at minimum, this area here. So they'll get back to 80 cents. Yeah, because look at here. That these areas here, it's consistent with accumulation. Big move up, come down. Big move up, come down. This is pumping liquidity into it, all right? Just to get attention. And then they built enough positions here. Then it will start to release out to the upside. So that's what you really want to be looking at when you see these coins that have made moves to the upside, come all the way back down after initial coin offering, and then you're trying to work out if this is a good asset to trade into or as a holder. Look at the structure of it. That's all I'm looking at. If the coin has a utility and there is a purpose, then that just adds more fuel to the idea of them going to that. Okay? So just take that. These sort of setups like here, or should I say structures, give me reason to believe that they're going to be making their way back to the coins, okay? If you've got an obscured asset where the wick is all the way at $1,500 and the coin now is at 10 cents, it's going to be a long time before it actually does move up that much, but can't say never in cryptocurrency, okay? Okay, anything else, ladies and gentlemen? I don't see anything growing except that prices are falling a little bit. This is, for me, ladies and gentlemen, I'm really not impressed right now with what's going on in the markets. I'm not. This press conference has just really rattled it for me. What they're saying, I'm not liking it at all. Go into the calendar again. See the comments. Here we go. Look at these comments. Wait for the press in 30 minutes. Yeah, we get that. Inflation remains somewhat elevated. So that would only make sense with the data that's come out. Risks to achieving employment inflation goals continue to move in better balance. That's fine. Dollar is negative in 30 minutes. Oh, dollar will be negative in 30 minutes. Ultimately, Dixie will be bearish soon. Fed will remain hawkish on their statement, but market sentiment is still for rate cut. And then we got here, it's not important that the rate cut unchanged. We guess this is the last. Important is the clue, when the Fed cut will start. We have the rate cut in next, remained unchanged over and enough. Today is an important Fed conference. To find out the clue of the rate, we expect dovish speech in the meeting about what will happen for next. Okay then. All right then, this is what I mean. It's like people are mixed with it. And the press conference itself is going to give us the clue. It's going to give us the clue. And Bitcoin is just taking a drop down. Now, you can imagine now, the guys that I asked you earlier on about your longs, okay? the guys that are now testing if this is going to hold, you're now risking a small amount of liquidity. So it is not costing you too much. You've had the first reaction. So this is where it's going to get a bit interesting when the actual press conference comes into play. What else have we got? ICP is far better than ADA ever can be. Oh, we got the conversation now. Tino, would like to know your point of view. What would happen? This guy is coming out in this hot. It's so hot. I would like to know your opinion on what will happen when we get rate cuts in September. Which move, and how long do you expect? Because rate cut can also give a bleeding. Historically, the federal funds rate, when they do change their fiscal policy, there's always a change in the marketplace. We usually expect around about a 30% correction in the stock market. That's what happens historically when the Fed pivots, okay? We have to make reference to the stock market, okay? Because if the Fed pivots, if we go into now and they're saying that we're waiting, okay, and we are going to cut, but not at the speed that you want it at, that's what I'm listening in for, the pace of the cut. Because if they say, yes, we're going to cut, and they just do a small percentage change, 25 basis points, Wall Street wants the same frequency of cutting as they had when it was being hiked. I don't think Wall Street is going to accept the fact that these days are gone. These right here, 0.25%. Those days are gone. They are not about anymore. Money will not be cheap like that ever again. That's what my opinion. And I think that when the only way Bitcoin can really succeed at going to the heights that we all want it to go at is if people genuinely think that fear is done. And not enough people think that. Bitcoin's starting to move down. Wait there. Starting to see some interesting behavior. Give me 2 seconds. I am not having this. Not again. Man, I can't stand this heat. I really can't. It's just breaking me apart right now. Okay, so look, Bitcoin's now dropping down. It's tested the daily open, but I'm not going to be concerned about it until the press conference comes into play. If you're playing this right now, just be very wise with it. Don't risk too much because it can just simply come straight back up. You've got stopping volume candle, stopping volume candle, stopping volume candle right there. It's going to get very, very tricky for us in a few more minutes. Let's get this live prepared and get ready for it. Is it bullish for rate cuts? I see that every time we get rate cuts, it's bearish for the stock market. It all depends on what's been going on before the rate cuts, okay? The rate cuts mean that they're cutting the interest rates on the yield for the dollar. So investors overseas will be like, maybe I'm going to take my money and not put it in the dollar. I'm going to put my money into the yen because the yield on the dollar is now coming down, okay? But it's not coming down too significantly, which is why they'll still hold out on dollars and still put their money into it, even though they are cutting it. That's why it's important that the cuts themselves are aggressive, because if they do cut aggressively and they do it like 75 basis points, which is what they're expecting, then the idea is that dollar's going to experience a hard drop, and then money's quickly going to go into other assets like your euros, your golds, your Bitcoin, your other commodities as well. So once we listen, we just need to get a cut first. The second we get the cut, that's the change. And that's what people are waiting for right now. That's why I'm trying to make sense of where price is going to go, especially with the dollar consolidating sideways. There's no reason for investors to do anything. Remember, there's around $7 trillion sat in the money markets, in ETFs, right? That where they're buying either sat in cash or bonds, and they're waiting to see what the Fed's going to do. This is why this meeting is very important right now. And if we don't get the cut, then boy, it's a time delay thing. It really is. The Fed's either going to say, we'll do it this year, but don't expect too much of a cut. That's what I think they could say. But what do we know? Unless I'm there with them, which I would like to go to the press conference. That would be absolutely brilliant. Price prediction of Matic near. Okay, look. I'm not going to... Price prediction of Matic. Bitcoin's going down. Matic's going down. A price prediction. Over what time frame? Well, look, let's just look at the bigger picture. If the Fed does do the cut and we hear good news, Matic will be going up. You're looking for the next area up here. That could be 55 cents, okay? Now, as long as they sustain it and they keep moving price and it's good news in terms of the Fed, then Matic can go beyond that point. Looking at the consolidation, you can see that there could be one massive W formation forming right here, okay? But we need to see them break out the 0.5585 zone to suggest that that could be the case, okay? Okay, Bitcoin's dropping. This isn't... Well, it's good in an essence, well, because it means that they could be bidding out, maybe. Looking at the bids. Yeah, we've got an order down here. Yeah, maybe an order. Right. Nah, we don't really... No. Not really that many orders coming into 7 million at the 65,150, but it's all up here. They want to sell the Bitcoin. We are probably going to get some volatility, ladies and gentlemen. We are more than likely going to get the volatility happening. What time is it? Okay. Wow. 3 minutes. Let's get this party started, guys. Let's go. Let's go. Here we are. All right. Get yourselves ready. All right. I'm a bit nervous. You know that. I'm actually nervous right now on what they could be getting ready for. Okay. Are you guys ready for this? Because I'm on edge. Let me just reduce myself down just a little bit. There we go. Bring me over to here. No? Yeah. That'll work. Is that good? We're going to have Powell here. We're going to have depth of market at the back of that. And then we should be good. Bitcoin's price should stall it. Nah. I'll make reference to that as and when. All right. This is about Powell. I feel on edge, man. Here we go. 2 minutes, ladies and gentlemen. Let's get these bad boys on. Now, listen, any of the speakers, we're looking for the Joe Ling. I don't think Joe Ling's going to be there. I think Gina's going to be there. All right? But it's going to be a very interesting one, ladies and gentlemen. It is going to be a very interesting one. And if you are trading, guys, just remember, just keep it safe. And if you aren't already, just go check out BTCC. For anyone in the United States that doesn't want to use KYC, go check out BTCC. It's in the description of the video and the live stream itself. You get bonuses, but you don't need KYC or VPN to use this company. 13 years in the game. It's our first preferred exchange that we've mentioned on this channel in 3.5 years. All right? So go show some love to BTCC. Now, let's get with the program. We should be seeing and hearing Powell speaking. This is Bitcoin's price for anyone passing through. Here we go. I'm going to watch this. No. We'll watch it on YouTube.
Employment and stable prices for the benefit of the American people.
Here we go, gang.
Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance, and the unemployment rate remains low. Inflation has eased substantially from a peak of 7% to 2.5%. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. We are attentive to risks on both sides of our dual mandate and I will have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP growth moderated to 2.1% in the first half of the year, down from 3.1% last year. Private domestic final purchases, or PDFP, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal of underlying demand, grew at a 2.6% pace over that same period, the first half. Growth of consumer spending has slowed from last year's robust pace, but remains solid. Investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment stalled in the second quarter after a strong rise in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 177,000 jobs per month in the second quarter, a solid pace, but below that seen in the first quarter. The unemployment rate has moved up, but remains low at 4.1%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years, and a strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market have returned to about where they stood on the eve of the pandemic, strong but not overheated. Inflation has eased notably over the past 2 years, but remains somewhat above our longer-run goal of 2%. Total PCE prices rose 2.5% over the 12 months ending in June. Excluding the volatile food and energy categories, core PCE prices rose 2.6%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As the labor market has cooled and inflation has declined, the risks to achieving our employment and inflation goals continue to move into better balance. Indeed, we're attentive to the risks to both sides of our dual mandate. We have stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. The second quarter's inflation readings have added to our confidence, and more good data would further strengthen that confidence. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we have seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the longer run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
What an absolute joke that is. I can't believe that. Honestly, I can't believe that.
Gina Smilik from the New York Times. Thanks for taking our questions.
Gina.
Markets pretty much entirely expect a rate cut in September at this stage. I wonder if you think that's a reasonable expectation, and if so, why not just make the move today?
Thank you. So on September, let me say this. We have made no decisions about future meetings, and that includes the September meeting. The broad sense of the committee is that the economy is moving closer to the point at which it will be appropriate to reduce our policy rate. In that, we will be data dependent, but not data point dependent. So it will not be a question of responding specifically to one or two data releases. The question will be whether the totality of the data, the evolving outlook, and the balance of risks are consistent with rising confidence on inflation and maintaining a solid labor market. If that test is met, a reduction in our policy rate could be on the table as soon as the next meeting in September. So you asked why not today, and I would just say, again, that the broad sense of the committee is that we're getting closer to the point at which it will be appropriate to reduce our policy rate, but that we're not quite at that point yet.
Non-farm payrolls, they want to know what the labor market's like. That he's pretty much told the market that, yeah, we're going to cut, but
to follow up
very
on that,
washy way.
If inflation behaves as you expect between now and September, would you regard a cut in September as sort of the baseline scenario right now?
So I guess I would think about it this way.
Here we go.
I'll give an example of cases in which it would be appropriate to cut and maybe that it wouldn't be appropriate to cut. So if we were to see, for example, inflation moving down quickly or more or less in line with expectations, growth remains, let's say, reasonably strong, and the labor market remains, consistent with its current condition, then I would think that a rate cut could be on the table at the September meeting. If inflation were to prove, stickier and we were to see higher readings from inflation, disappointing readings, we would weigh that along with the other things. I think it's going to be not just any one thing. It's going to be the inflation data. It's going to be the employment data. It's going to be the balance of risks as we see it. It's going to be the totality of all of that help us make this decision.
And just to follow up on that, specifically, in what ways right now, given all you've seen over the last few months in particular on shelter, on services, et cetera, in what ways are you not confident right now that inflation is on the way back to 2%?
I think it's just a question of seeing more good data. We have seen the last couple of readings have certainly added to confidence, and we've seen progress across all three categories of core PCE inflation. That's goods, non-housing services, and housing services. So it's really just, we had a quarter of poor inflation data at the beginning of the year. Then we saw some more good inflation data. We had 7 months at the end of last year. We just want to see more and gain confidence. And as I said, we did gain confidence, and more good data would cause us to gain more confidence.
Which they did get, but...
Thank you. Colby Smith with the Financial Times. The March SEP pointed to 3 cuts in 2024 with core inflation at 2.6% and the unemployment rate at 4%. Since we're now at that level in terms of inflation and already beyond what was projected for the labor market, I'm just wondering if that rate path is back to being the best guidepost for policy rather than, let's say, the shallower one laid out in the June SEP.
So I would just say, really the path ahead is going to depend on the way the economy evolves. And I can't really give you any better forward guidance on it than that. We didn't, of course, do an SEP at this meeting. We will do another one at the September meeting. I would just say I can imagine a scenario in which there would be everywhere from 0 cuts to several cuts, depending on the way the economy evolves. And I wouldn't want to lay out a baseline path for you there today. I've said what I can say about September and about today, though.
He's bored. There's NASDAQ right there for you.
Chair Powell,
this
you've
dude.
said before that you wouldn't wait until inflation got to 2% to cut rates because of how inflation has lagged. Does that apply for the labor market too? If the labor market is back in equilibrium, why is restrictive policy and potentially very restrictive policy, given the high real funds rate, warranted right now?
So this is the very reason that we're thinking about that we've said in our statement that we're going back to looking at both mandates and that we think the risks are coming back into balance. We think what the data broadly show in the labor market is an ongoing gradual normalization of labor market conditions, and that's what we want to see. We've seen that over a period of a couple of years, and a move really from overheated conditions to more normal conditions. We are watching the labor market conditions quite closely, and that's what we're seeing. If we start to see something that looks to be more than that, then we're well positioned to respond. That's part of what we're thinking.
And when you talk about seeing something that's more than whatever softness or slowdown you expect, in the past, you've said that stronger growth wouldn't override better news on inflation. I wonder how that cuts the other way. If you're seeing more softness in the labor market than what you would expect, does that change the calculus on what you're looking for out of the inflation numbers to recalibrate policy?
So we have growth isn't one of our three. We have two mandates, as you know. The labor market, maximum employment is one, and stable prices is another. So we weigh those two things equally under the law. When we were far away from our inflation mandate, we had to focus on that. Now we're back to a closer to even focus. So we'll be looking at labor market conditions and asking whether we're getting what we're seeing. And as I said, we're prepared to respond if we see it that it's not what we wanted to see, which was a gradual normalization of conditions. If we see more than that, and it wouldn't be any one statistic, although of course the unemployment rate is generally thought to be a good single statistic, but we'd be looking at wages, we'd be looking at participation, we'd be looking at all the things, surveys, quits, hires, all of those things to determine the overall status of the labor market. But we're looking at it now. I would say, again, I think you're back to conditions that are close to 2019 conditions, and that was not an inflationary economy. Broadly similar labor markets then. I think core inflation was actually running below 2%. So I don't now think of the labor market in its current state as a likely source of significant inflationary pressures. So I would not like to see material further cooling in the labor market, and that's part of what's behind our thinking. The other part, of course, is that we have made real progress on inflation, and we've got growing confidence there that we are not quite there yet, but we're getting more confident that we're on a sustainable path down to 2%. So those two things are working together, and we're factoring those both into our policy.
Chris.
Chris Rugaber at Associated Press. You mentioned not wanting to see any further cooling in the job market. Why not, or would you consider preemptive cuts to prevent if you saw risks of an unexpected cooling? Is that something you would cut ahead of time for?
So I wouldn't say I wouldn't want to see any other cooling. It would be more of a material difference. If we'd be looking at this and if we see something that looks like a more significant downturn, that would be something that we would have the intention of responding to. So in terms of I don't think of it that way. I think of it as we're actually in a good place here. We're balancing these two risks of go too soon and you undermine progress on inflation, wait too long or don't go fast enough, and you put at risk the recovery. And so we have to balance those two things. That's the nature of having two mandates, and I think this is how we balance them. It's a rough balance, but it does feel like that. Again, the labor market feels like it's in a place where it's just a process of ongoing normalization. 4.1% unemployment is still historically low, and we'll just have to see what the data show us.
And just to follow quickly, wanted to see what you thought of the recent JOLTS report, which did show gross hiring has come down even below 2019 levels. Layoffs remain low. So it painted a picture of a very static labor market. Is that sustainable in your view, or
Bitcoin's going to move in a minute.
Thank you.
So I think all of the data points continue to point to kind of the direction we would want to see. So that was taken as there was a decline in job openings. That was good. Today's ECI reading was a little softer than expected, so that's a good reading. It shows that wage increases are still at a strong level, but that level continues to come down to more sustainable levels over time. That's exactly the pattern that we want to be seeing. So I think the data we've been seeing in the labor market are broadly consistent with that normalization process. Again, we're closely monitoring to see whether it starts to show signs that it's more than that.
Steve.
Steve Leisman, CNBC. Mr. Chairman, back in March, you talked about cutting rates as a process, and in June, you talked about the idea that, well, one rate cut wouldn't do anything. So I wonder if you can sort of follow up on Colby's question. Talk about, are you weighing the economy right now in terms of its ability to withstand multiple rate cuts? Talk us through the process that you're thinking, or is it just one rate cut? Or are you in the process now of thinking that rates need to be normalized here? Thank you.
Yeah, I can't really say that, honestly.
Come on, pal. Say it, bro.
We've seen, significant movement in the labor market. And, we're very mindful of this question of is it just normalization or is it more? We think it's just more normalization, but we want to be in a position to support the labor market. At the same time, we're seeing progress on inflation. So, we actually got to this. We raised rates a year ago at the July meeting. And if you look at the situation in the economy a year ago, inflation was over 4%. It was a completely different economy. Now we've made a lot of progress, and the labor market, as I think, unemployment was in the threes, mid threes. So it's a different economy, and I think it's coming to be time to adjust that so that we support this continued process. The thing we're trying to do is, that we have, we've had this really significant decline in inflation, and unemployment has remained low. And this is a really unusual and historically unusual and such a welcome outcome for the people we serve. What we're thinking about all the time is how do we keep this going? And this is part of that. We think we don't need to be 100% focused on inflation because of the progress we've made. 12-month headline at 2.5, core at 2.6. It's way down from where it was. The job is not done on inflation, but nonetheless, we can afford to begin to dial back the restriction in our policy rate. And I think we're just as part of a process. In terms of what that looks like, I think most you would think in a base case that policy rates would move down from here, but I don't want to try to give specific forward guidance about when that might be, because the pace at which it might happen, because I think that's really going to depend on the economy.
When that might be, he said. Be careful, pal. Rachel.
Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. On inflation, do the past few months of good reports look like what we saw last year, where you really had a lot of momentum with a few bumps in between? Would you characterize that kind of momentum as back on track at this point in the year?
Actually, what we're seeing now is a little better than what we saw last year. Last year, as we pointed out late in the year, a whole lot of the progress we saw last year was from goods prices, which were going down at an unsustainable rate, disinflating at an unsustainable rate. This is a broader disinflation. This has goods prices coming down, but we're also now seeing progress in the other two big categories, non-housing services and housing services. So, so the thing is, you got 1/4 of that. We had 7 months of low inflation. You got 1/4 of this. I would say the quality of this is higher, and it's good, but so far it's only a quarter. So I think we need to see more to know that we're, to have more confidence that we're on a good path down to 2%. But as I mentioned, our confidence is growing because we've been getting good data. Okay. And things like the ECI report, and frankly, the softening in the labor market conditions, give you more confidence that the economy's not overheating. It doesn't look like an overheating economy. And it looks like an economy that's normalizing.
Okay. And if we were to think about the first couple of months of the year, is there any sense now that they were these blips that could have actually allowed for earlier rate cuts, as were some of the projections going into 2024?
So the thing about if what it is seasonality, and it could just be, it's very, very hard to do appropriate seasonal adjustments. If that's what it is, then that actually implies that other months we're reporting too low inflation. If you smooth it out, it's a zero-sum game. And that's why we look at 12 months. We look at 12 months because that takes all that out, all those effects out. 12-month now is 2.5% headline, 2.6% core. This is so much better than where we were even a year ago. It's a lot better. Now, the job is not done. I want to stress that, and we're committed to getting inflation sustainably down to 2%, but we need to take note of that progress, and we need to weigh the risks to the labor market and the risks to our inflation target now more equally than we did a year ago.
Michael McKee.
This guy.
Michael McKee from Bloomberg Radio and Television.
Bloomberg. Here we
I'd
go.
like to ask you about the balance of risks as the American people see it. At this point, is the risk greater to leave interest rates where they are, given the damage that higher interest rates do to the economy in slowing demand and raising prices, or is it more important for the American people that you keep rates where they are to bring inflation down?
That's the moral question.
I think that we've been given an assignment by Congress. This is how we serve the American people, is by achieving maximum employment and price stability, right? And so in our, quasi-constitutional document, the Statement on Longer-Run Goals and Monetary Policy Strategy, we look at the two goals, and if one of them is farther away than the other, the two variables, inflation and employment, if one is farther away from its goal than the other, then you concentrate on the one that's farther away, and you take account of the time to reach the goal. So for the last couple of years, the best service we could do to the American people was to focus on inflation. But as inflation has come down, and I think the upside risks to inflation have decreased as the labor market has cooled off, and labor market has softened, probably the inflation is probably a little farther from its target than is the employment, but I think the downside risks to the employment mandate are real now. So we have to weigh all that. And if you think about where that takes us, is we have a restrictive policy rate. It's clearly restrictive. It's been the rate we've had in place for a full year. And the time is coming, as other central banks around the world are facing the same question. The time is coming at which it will begin to be appropriate to dial back that level of restrictions so that we may address both mandates.
Well, you have event risk, basically, with the jobs report on Friday and another one before you meet again. Are you certain that you won't fall behind the curve and lead to unnecessary unemployment if you wait until September?
Certainty is not a word that we have in our business. We get a lot of data between now and September, and it isn't going to be one data read or even two.
This
it's
is
going
important.
to be the totality of the data, all of the data, and not just it, and then how is that affecting the outlook and how is it affecting the balance of risks? That's going to be the assessment that we do. Of course, we'll all look carefully at the employment report, but so much other data coming in and so much happening between now and the September meeting, and we'll make a judgment.
Edward.
So more data, but it looks like we're getting the cut.
Edward Lawrence of Fox Business. I do want to dig deeper on what Michael and what Nick were asking. There's a shift in the statement to balance between the focus between inflation and jobs. Looking at the job sides, we've seen wage data show sort of an abrupt slowing. We're hearing on earnings calls from companies like Intel abrupt layoffs. In the jobs report from the BLS, government jobs has been a leading creator. Could the government jobs as a sector hiring mask underlying weakness in the jobs report?
This is a
we'll look at
valid
everything.
question, man.
We've seen some tendency to have a narrowing base of job creation in some months going back, but then we've had some months where job creation was broader, and also the headline number of jobs has come down. So but you look at the whole thing, and I think you do look at private demand extra carefully. To your point about government. So we'll just be looking at all those things.
So as a follow then, so could the Fed then be behind the curve? Because you said some of the reports, last meeting, you said the reports could be noisy or overstated. Was there a discussion of what kind of discussion was there for a cut today? And could the Fed be behind the curve?
Yeah, so look, the objective is to balance the two risks, right? It's the risk of going too soon and the risk of going too late. We've been, We had 7 months of good inflation data at the end of last year. We said we wanted to see more. We pointed out that too much of this was coming from goods, and sure enough, the first quarter wasn't great inflation data. Now we've got a quarter that is good, and we're balancing the risk of going too soon against the risk of going too late. That's what we're doing. There's no guarantee in this. It's a very difficult judgment call, but this is how we're making it. But in terms of today, your question about today, we did have a nice conversation about this issue today. The overall sense of the committee, as I mentioned, is that we're getting closer to the point at which it'll be appropriate to begin to dial back restriction, but we're not quite at that point yet. We want to see more good data. The decision was unanimous. All 19 participants supported it. But there was a real discussion back and forth of what the case would be for moving at this meeting. A strong majority supported not moving at this meeting. That was the strong sense of the committee. But it's a conversation that we had today, certainly.
Courtney.
Courtney Brown from Axios. Thank you for taking our questions. When the Fed was raising rates, there was a lot of conversation about long and variable lags. I wonder if that applies on the way down too. How are you and the committee thinking about that?
Yes, it does. And I think the lags have kind of showed up here in the last 6 months, by the way. You really do now see the restriction, whereas, even a few months ago, people were questioning how restrictive policy was. Look at the labor market now. You can see, and look at rate-sensitive, interest-sensitive spending. You really do see now that policy is restrictive. I wouldn't say it's extremely restrictive, but it's certainly effectively restrictive. Yes, the lag should be on the way down. It should take some time to get into the full economy, affect financial conditions, and that affects economic activity, hiring, and that kind of thing, and ultimately inflation. It's not instantaneous, although it's faster than it used to be because markets move now in anticipation of our moves.
So are you worried then that if monetary policy acts with long and variable lags, even when you're lowering interest rates, it might be too late for the Fed to help stave off any kind of slowdown in the labor market or broader economy?
Yeah, we have to worry about that. Just to make it clear, it's a very difficult, challenging judgment, and we don't want to go too soon. We don't want to go too late. But this is how we've made that judgment. I feel good about where we are. We're certainly very well positioned to respond to weakness with the policy rate at 5.3%. We certainly have a lot of room to respond if we were to see weakness. That's not what we're seeing, though. What we're seeing, look at the first half growth numbers. Look at PDFP at 2.6% for the first half. It's not signaling a weak economy. It's also not signaling an overheating economy. Labor market, admittedly, the unemployment rate has moved up 0.7, and we're seeing a normalization there. But wage increases are still at a high level. Unemployment is still at a low level. Layoffs are very low. Initial claims have moved up, but they're pretty stable, and they're historically not high at all. So the total scope of the data suggests a normalizing labor market. And again, we are carefully watching to see that continues to be the case.
Victoria.
Hi, Victoria Guido with Politico. On the labor market, I was wondering, how worried are you all about unemployment rising to the point where it triggers the SOM rule? And would that potentially affect how quickly you cut rates?
So I would just say that the question really is one of, are we worried about a sharper downturn in the labor market? So, and the answer is we're watching really carefully for that. We're aware of that rule, which is really for
God's sake, man,
a statistical thing that has happened.
I could have answered that
history.
question.
A statistical regularity is what I'd call it. It's not like an economic rule where it's telling you something must happen. So, again, what do we see? What are our eyes telling us? We look at all the things we're seeing, and what it looks like is a normalizing labor market. Again, job creation at a pretty decent level, wages moving up at a strong level, but coming down gradually. Job vacancies have come down, but they're still high by historical standards. So Again, I've been through some of the data already, but what we think we're seeing is a normalizing labor market, and we're watching carefully to see if it turns out to be more. It starts to show signs that it's more than that, then we're well positioned to respond.
Is there reason to think that the labor market might behave differently this time than it has historically?
I think, history doesn't
can't be
repeat
bothered.
itself. It
Rhymes.
rhymes. I think
There you
that
go,
statement
boy.
is very true about the economy. You never assume it's going to be just the same. An example would be, is there a trend increase in the level of vacancies? There are many, many examples, so it's never exactly the same. Also, let's remember that this pandemic era has been one in which so many, apparent rules have been flouted, like the inverted yield curve, for starters. So many pieces of received wisdom just haven't worked, and it's because the situation really is unusual or unique in that so much of this inflation came from the shutdown in the economy and the resulting supply problems in the face of, admittedly, very strong demand. So the whole situation is not the same as many of the other prior inflation or downturns that we've seen, or business cycles that we've seen. So we're having to learn, we're having to, to be very careful about the judgments that we make, I would say. So we don't assume that these regularities will just repeat themselves automatically.
You know. He can't be bothered
Chair
anymore.
Powell, Mara Mokwe with Bloomberg. There seems to be quite a difference between what the anecdotal data are telling us, such as the very recent downbeat beige book, and the hard data. Do you take those anecdotes seriously? That is, that the economy and labor market are cooling much more rapidly than what's shown in the data?
So I do take that seriously, and the beige book is great. What's even greater is hearing the Reserve Bank presidents come in and talk about their conversations with businesses and business leaders and workers and people in the nonprofit sector in their districts. But I'll tell you, it's a pretty, the picture is not one of a slowing or, a really bad economy. It's one of, there are spots of weakness, and there are regions where growth is stronger than other regions. But overall, it's, again, look at the aggregate data. Aggregate data is, particularly PDFP, private domestic final purchases, is 2.6%, and that's a good indicator of private demand. So we listen to all of that, and it does. I think it's important to listen to anecdotal data and not just look at the aggregate data. Especially, it's very hard. GDP data can be volatile quarter to quarter. So it's just hard to measure economic activity. There are it's just difficult to do. So I look at both, but I wouldn't say that the anecdotal data is uniformly downbeat. It's more mixed.
What's he saying? Jolene?
Thank you. Jolene Kent with CBS News. Chair Powell, thanks for taking our questions today. You have consistently said that the Fed does not consider politics in making decisions. With a possible September rate cut on the table, it would be less than 2 months before the election, and former President Trump reportedly said that cutting rates so close to the election is something the central bank knows they shouldn't be doing. What's your response, and do you believe it's possible to really remain apolitical with a September rate cut?
What? She brought it up. No way.
First of all, we haven't made any decisions. I would say it this way. Haven't made any decision about any future meeting. I don't know what the data will reveal or how that will affect the appropriate path of our policy. I really don't know. I do know how we will make that assessment. That's what I do know. So if you take a step back, the current situation, again, is inflation has come down much closer to our goal, and that's happened while unemployment has remained low. We're very tightly focused on using our tools to try to foster that state of affairs continuing. That's at each of our meetings and all of our decisions, our focus is strictly on that and really on nothing else, doing our part, whatever that part may be. We're using our best thinking. We're doing our best to understand the economy. We follow academics. We follow the many commentators who bless us with their commentary, but we don't change anything in our approach to address other factors like the political calendar. Congress has, we believe, ordered us to conduct our business in a non-political way at all times, not just some of the time. I'll say this too. We never use our tools to support or oppose a political party, a politician, or any political outcome. The bottom line is, if we do our very best to do our part and we stick to our part, that will benefit all Americans. If we get it right, the economy will be stronger, we'll have price stability, people will find jobs, wages will rise in real terms, everyone will benefit. So that's what we believe, and that's how we will always act. This is my 4th presidential election at the Fed. I can tell you this is how we think about it. This is what we do. So anything that we do before, during, or after the election will be based on the data, the outlook, and the balance of risks, and not on anything else.
Just a quick follow-up. Do your economic forecasts and models take into account the two very different economic plans of these two presidential candidates, Harris and Trump? And if so, how?
No, we do not do that. We
They've set this up.
absolutely do not do that. We don't know who's going to win. We don't know what they're going to do. We don't act as though we know, and we just can't do that.
This is a setup.
Basically, we have our forecast. We're not. We can run simulations of different potential policies, but we would never try to make policy decisions based on the outcome of an election that hasn't happened yet. That would just be a line we would never cross. We're a non-political agency. We don't want to be involved in politics in any way, so we wouldn't do that.
Nicholas.
This is what he's been saying, man.
Thank you, Chair Powell. Nicholas Jasinski from Barron's Magazine.
This is interesting.
There hasn't been a dissenting vote on an interest rate decision in some time. If the data do evolve as you expect, if you do have more confidence by the September meeting, do you get the sense that there will be a unanimous vote on an interest rate move in September? Or basically, are there meaningful differences in committee members' assessments of how much more confidence is needed?
That guy looks like me shaved.
Meaningful differences. There are, and we talk a lot before, during, and after the meeting. We do have a very robust discussion of these things. You're right that in most cases, people, if they feel heard and they feel that their position has been given serious consideration, for most people, most of the time, that's going to be enough. There are dissents. That's fine. No one has a veto. No single person has a veto. So it just is a question of who will vote for and against. We've had dissents. We haven't had so many during the pandemic era, and it just may be that we've felt more united because we felt under a lot of pressure to get things right. But before the pandemic, we had plenty of dissents, and dissents happen. It's part of the process. There's nothing wrong with dissents, and if it happens, it happens.
Jean.
Hello, Jean Young with M&I Market News. Is a 50 basis point cut as a first cut at all likely or even on the table? Thank you.
Straight to it.
I don't want to say, I don't want to be really specific about what we're going to do, but that's not something we're thinking about right now.
Jennifer.
Of course, I haven't made any decisions at all.
He wants to make sure. He's been told to say this stuff, man.
Jennifer Schonberger with Yahoo Finance. Not to get into the minutes, but you said there was a real discussion today for moving at this meeting. I'm curious if you could provide some more color on the nature of the discussion today at the meeting about a possible rate cut as early as September.
Well, so, the way the meeting is set up, the first day, there's a discussion of financial stability because it's every other meeting we have that. And then we have an opportunity to comment on that. Then we have an economic go-around. And then this morning, we have the monetary policy go-around. And I think in people's economic go-around and in their monetary policy go-around, people express their views about this. And there's a range of views. People, as you will know from the speeches that they give, people have different ways of thinking about the economy. And so, in the minutes, we'll lay this out in a much better way than I can do off the cuff. But there's a range of perspectives, and but I do think that we're a consensus-driven organization. People come together. This was a unanimous decision, and at the end, everyone supported the outcome, not just the voters, but everyone. So I would also say some people examined the possibility, the case for moving at this meeting, but overwhelmingly the sense of the committee was not at this meeting, but as soon as the next meeting, depending on how the data come in,
But there is a growing sense of confidence that you could move at the next meeting, assuming
Yes.
inflation comes.
Well, assuming that the totality of the data supports such an outcome, no question, that is the case. That, as I mentioned, we think that the time it's approaching.
Can't say
And
it.
if we do get the data that we hope we get, then a reduction in our policy rate could be on the table at the September meeting.
What are you saying, bruv?
Hi, Chair Powell, Nancy Marshall-Genzer with Marketplace. Former New York President Bill Dudley wrote an op-ed in Bloomberg earlier this month, which you probably saw, in which he said, quote, "It might already be too late to fend off a recession by cutting rates. Dawdling now unnecessarily increases the risk." Is he wrong?
Fair enough.
This is the judgment that we have to make, and we're well aware of the judgment. We're as I've said, we have to weigh the risk of going too soon against the risk of going too late. If we go too soon, we can, we had a lot of advice, to go ahead and cut after the 7 good months of last year. We didn't. We said we needed to see more. Then we saw some higher inflation. We've seen 1 quarter of good inflation, and we've seen the labor market move quite a bit. And as I mentioned, I don't think it needs to, cool off any more for us to get the inflation results that are related to the labor market. Not all inflation is, of course. So I think it's a difficult judgment to make, and what you see is the judgment of the committee is that that time is drawing near. That time could be in September, if the data support that.
And have the chances of a hard landing increased?
So I don't know whether they've increased. I think they're low. I think this is, you don't see any reason to think that this economy is either overheating or sharply weakening. That's just not in the data right now. What's in the data right now is an economy that's growing at a solid pace, a labor market that has cooled off, but nonetheless, unemployment is low. The data overall show a strong labor market. So that's really what you see. It's neither an overheating economy nor is it a sharply weakening economy. It's kind of what you would want to see, but of course, the job is never done. We're watching to see, which way the economy heads, and I think if we are to respond to weakness, we're certainly, well equipped to do that. But that's not what we're seeing. What we're seeing is strong economic activity and, a good labor market and inflation coming down.
These questions are awesome, man. Come on, give me another good one.
Thank you so much. In the minutes of the June meeting that came out a few weeks ago, there was a discussion about communications, and some Fed officials said maybe the Fed wasn't as clear enough about its reaction function. And when I talk to the commentators who bless you with their comments, they say that they really don't have a sense of what is going to judge, maybe not the first cut, but the pace of the cuts going forward. They don't have a good sense of that. Is there anything you can say, like, how will we judge that?
I think the reality is that forecasters, and this isn't just the Fed by any means, forecasters have been continually surprised by, for example, the strength of the economy last year. So I think we had to be pretty humble about giving forward guidance about this, that, and the other thing. We need to be pretty careful about that. And, when you're saying you're going to be data-driven, of course, it's always what the data, how they affect the outlook and the balance of risks, but nobody has great vision deep into the future. In terms of a reaction function, that's a long time discussion that people have had forever. I think people have understood for a long time, actually, that we were very focused on bringing down inflation. Nobody was really confused about that. The data have, again, you've seen significant improvement in inflation just for the last quarter. Markets move around on the data, really, not so much. It's not really what we're going to do. It's more just that the data keep coming in, and markets are very, very responsive to that data right now.
Bitcoin's gone to bed.
Go to Jeff for the last question.
Last
Thank
question.
You, Mr. Chairman. I'm going to change gears on you just a little bit from all of the rate talk and whatnot. With Fed now being in the books for a little over a year, there hasn't been a whole lot of talk about central bank digital currency, and wondering if you could give us an update on where things are with that. Is that considered a dead issue now? Is it still something that's being discussed within the committee, and what's happening with that?
It's not something that comes up at all in the FOMC. So more broadly, digital finance is an area that has really significant implications for payments generally, instant payments, and it's something that's going to really change the way it's going to make more efficient and hopefully safer and all those things the way payments are made around the world. And so we have people who are researching that and trying to keep up to speed because we play an important role in the payments sector, both as a convener and as an operator too. In terms of a CBDC, there's really nothing new going on. There's not much going on at all. We don't have the authority to issue a retail CBDC that's available to the public. We're not seeking that authority. So what we're doing is keeping up with developments there. Pretty much every major central bank in the world is at least doing that. Some of them are actually seriously looking at implementing a CBDC. We're really not. We're really just evaluating, the story and what's happening out there. I think it's work that we need to be doing which could be very beneficial down the road. But we don't have on a CBDC. We don't have any plan. We would need to go to Congress, and we have no plan to do that. No one here has decided that we think it's a good idea yet. Thank you.
Look, he can't wait to get out of there. He can't wait to get out of there. What an absolute wild meeting that was. Straight up. I did not expect the questions that came out from Joe Ling. I did not expect them to talk about that. The first parts of the question were bloody boring. Bitcoin's taken the day off and not gone anywhere. The only thing that's moved is the NASDAQ, and how beautiful is that? And then you go over to Nvidia, and she's up 13%, and Bitcoin's had the day off. What a boring asset. That is just so crazy. You had more volatility at the open of Asia than you had during the FOMC press conference. That doesn't make sense to me. Where has retail gone? What's it doing? Nothing. Doesn't make sense. It's going down, yeah, but at least do something. That really baffles my brain. It really does. We're doing all right on our play on the NASDAQ. That's still working nicely to the upside. So that's working fine. I'll be looking to get rid of that position soon. Bitcoin's pulling back. It just doesn't make sense, ladies and gentlemen. So the bigger picture is pretty simple, right? No real cuts, but they're going to be cutting, but they're not going to be cutting, Look at these questions here. Fed Powell, Q&A reporters, overwhelming sense of meeting was not to cut this meeting, but possibly at the next meeting. We think time is approaching. For me, it's not. I'm not really buying into it all. This behavior with BTC is just, I don't get what's going on. NASDAQ's starting to go back down, but it has been making significant moves up. Bitcoin's just dropping right now. What a joke of an asset. Gold is going up. You'd think it was going to go with the same way with BTC, Tesla, and Solana, down, Ethereum, down, XRP, down. It really depresses me at best of times when they don't do anything with Bitcoin. It really does. Look at them getting busy right now. Look, it's getting busy right now. They're getting busy. 224 contracts orders right there. It's just... What do you guys think of that? Huh? That was a poor FOMC, but they did really ask really good questions. Joe Ling, the females asked towards the end, asked the great questions. And then that CBDC question at the end. What's that got to do with anything? But looking at this, guys, again, if you took a probe bet on this play, you're not getting no information. It may be tonight. Asia might react, because that's what happens in the market. It's always at the end of the meeting and when everything's all nipped in the bud. We know where we stand right now. News articles are going to come out very shortly, and they're going to be highlighting what the story is. Look, here we just refresh this. Powell says downside risk to Fed's lower labor mandate is real. Okay, Powell says soon Fed could cut rates as soon as September meeting, but we weren't getting that same logic. Why? Doesn't make sense. Yeah, he's going to cut, but nah, man, I don't get it. Maybe Bitcoin's the leading indicator. Maybe Bitcoin is leading it. But 3% up for the day for the NASDAQ is wonderful. Oil is moving up like crazy. The bonds market themselves, let's have a look at the bonds. Bonds are going up. Yields are going down. That's good news. But Bitcoin's having the day off. All right? So it's obviously been moving so much lately. It frustrates me. It really does. Maybe if I kill the live, Bitcoin might actually start moving. Don't go down. I'm sick of it. Here we go. I'm sitting in a loss now. Should I close my position given the boring meeting? Well, if you know your loss, you know where to lose. If you know how much you're prepared to lose, then kill your trade. If you know that boundary's been hit. If it's been hit, then you kill your trade and work on the next trade. Okay? But the actual response has been so muted, which only makes sense because no one's about. That makes sense now, and you've just seen it for yourselves. You've seen the euro pumping. You've got gold pumping. You've got Nvidia pump. Tesla moving ever so slightly. Oil, wonderful. NASDAQ and the S&P, great. And then Bitcoin doesn't do anything. And I'm looking at the orders themselves, and I'm not really getting that much from the order book. Look, I've got very marginal positions, marginal orders, sevens. Look at each contract. Look, 0.46. Down a bit. Really does frustrate me. You'd think it was going to move. They could drop it. The lack of interest, and then it's just off she goes. They need to hold this range to suggest that, but it's not doing anything. Any questions, ladies and gentlemen? No, ladies and gentlemen, I won't be going live later on, okay? So that's why I'm spending a bit of time with you all. But for anybody new that has made it to the live stream, mad love and respect for passing through, okay? Remember, if you want this system here, this hybrid system, go check out the Traders Reality website, not when I'm pulling that face, and do this free course. If you want trade setups similar to the ones that we've got going off on the website, where you join the guys in the Discord and we do 5 setups plus every single day, then go and check out the members area on the Traders Reality website. And then, of course, if you want to trade like NASDAQ, S&P all in one place, go and check out BTCC, because they do actually have the ability to trade NASDAQ, S&P, Nvidia, Tesla, got all those asset classes all over on that website. So everything's in the description of the video. With that being said, ladies and gentlemen, go and enjoy your night. I'm probably going to go to bed because Bitcoin's done the same thing. Let's see what happens once we end the live. Take care of yourselves, gang. It has been fun. Could have been better. Take care, gang. Peace. This guy needs to stop. Oh, God. I need to stop winking, man.